just business news, we're news for business people.
Good afternoon and a happy new year to you. You're watching Bloomberg Quint Live. I'm Alex Matthew and these are the headlines. Muted trade on the first day of 2018, broader markets outperform. India VIX advances further. The country's largest car maker, Maruti Suzuki, reports a 10% rise in December sales, but exports drop 6%. HDFC Standard Life gains more than 3% after CLSA initiates coverage. And it's a foggy start to 2018 in the national capital, affecting train and flight movement to and from the city. And with that, it's over to Darshan Mehta for the first hot money of the new year.
Thank you, Alex, and Happy New Year to you. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Kalra of Target Investing and Lakkar of Newberry Capital join us on the show. Thank you to both of you for joining me on the show, and a Happy New Year to both of you. Today on Hot Money, we'll discuss stocks like Tata Motors, Berger Paint, Syntex Industries, MCX, and we would ask them for a stock recommendation for 2018. Let's move on to the first stock, and that is Tata Motors. One of the cheapest stock as far as the auto space is concerned. Hasn't done much, but for the past 2 or 3 days, the counter seems to be active. It's been seeing an uptrend, but is it the right time to buy Tata Motors, or would they prefer some other stock in the auto and auto Inc space? We'll ask our guest. Samir, I'll start with you. Any view on Tata Motors?
See, I have a neutral to bearish view on Tata Motors because of two things. One is their raw material costs are going up. If you see steel prices and other raw material costs, they're going up. And if you see the auto comp sector, they are due for a rate hike in the auto comps for next 6 months to 8 months. So that will increase their raw material costs. On the other side, if I see the volumes are picking up because from 1st Jan there was a notification which was about to come in for the air blowers to be compulsory in the new CVs.
Airbags.
Air blowers.
Okay.
The ACs.
Okay, air blowers. Okay.
So that's compulsory now in all the new CVs, which is going to come from 1st Jan. So that inventory is going to hit on the 3rd week of January. Now this pushed up the sales in October, November, December because these changes will result in the higher costs. On the other hand, to push this kind of inventory, because the demand is less, there's around a 15 to 20% steep discount which is being offered at the dealer point of it, not the company point of it. So a certain part goes from the dealer pocket, a certain part goes from the company's pocket. This also puts pressure on the margin. So on the domestic business, if I see there are a lot of pressures before a positive view comes out of it. And the new CEO has put a timeline of 18 months to be profitable, which I think quarterly results this time will show us whether it's on path or there's a deviation in that. On the other side, if I see Jaguar and Land Rover, see the global demand in a certain sense is peaking out. In the certain sense that the competition is getting bigger, and the only problem in that I see is the R&D spend, the amount of R&D spend which has to be done. So they have around 24,000 crores intangible under development. So that's taken as a R&D spend, which they do. So that amount, if they're doing a R&D spend, and to gain a profit out of that amount, you have to spend around 4 lakh or 5 lakh, that kind of a model to make it profitable even. So I think that R&D spend is going more towards loss making. It's coming out with new products, but the only point is that profitability which you see with the new models is lower because the R&D spend is being capitalized in the intangible side. So these two things makes me a little bearish on the stock. as if you see the valuation comparatively, yes, it's cheaper. But the only point is if the business dynamics are not there for that growth to kick in next 6 months or 12 months, the valuations will remain cheaper going ahead also.
Okay, so that's two reasons why Samir believes that, you know, Tata Motors will not be his preferred pick. Sangeet, what do you make of Tata Motors?
So I also remain bearish to neutral to the stock. Now, if you talk about valuations, yes, they do appear reasonable, but over the last 5-year period, they have always been reasonable in that sense. So, in comparison to somebody like Maruti or any other auto stock, I think Tata Motors has all different parameters to evaluate on. So, if you talk about the company, about 80% of the revenue comes from the Jaguar Land Rover business.
Yes.
Only 20% forms part of the domestic business. And if you talk about the EBITDA, the entire 100% is coming from the international business itself. So let's discount the turnaround in the CV cycle or the passenger vehicles, because that on a consolidated company level, that's not going to matter. Now, if you talk specific to Jaguar Land Rover, so they have about 3 launches planned for 18-19. So we'll have to see how that pans out. And once these new launches are done, you will have a very high discounting for the existing models which will be there.
Okay.
So that will be an important parameter to watch out for. Also, you have the entire transition to the electric vehicles which is going on globally.
Okay.
It's happening at a slower pace in India, but globally it's happening at a rapid pace. So if you talk for Jaguar Land Rover, they are obviously launching one electric vehicle next year. But that transition, that success, so that's all a grey area as of now. So I'll have to wait, before taking a call whether it makes an investment case, because there are a lot of uncertainties in times to come.
Okay, so this is Tata Motors, but overall on the auto space, are you bullish, or you share the same concerns for the whole auto space as such?
So talking specific to auto space, I would say valuations is something which I'm hunting for. I don't find any value. There are great companies, obviously. You have Maruti, you have Bajaj. Bajaj obviously is a little cheaper, but I see a lot of froth in the market as such.
Okay.
So I would wait for a significant correction before putting my money.
Okay. Yeah, Samir, I just wanted to come back to a point you were making in terms of, raw material hike and, auto ank revision of their prices. So that would definitely impact across the board. There would be an impact.
Yeah,
So what's your view on auto as a space? Is there something that you prefer in this space?
See, what happens if you take passenger vehicles, that auto hike which comes in January and April. So one will happen in January, which is about to kick in, and another will happen in April. So generally what happens, the auto anks will have a price hike in March, generally. So that April hike in the passenger vehicles absorbs that kind of a hike. Because see, if you're a 45% of raw material as a whole auto ank space for a company like Maruti, right? A 4 or 5% hike will really not matter on your books, and you're able to pass it on much more easily.
In a PV, in a passenger.
In the passenger vehicle, and even in the two-wheeler, where consumer is the buyer, it's much more easier to pass it on. But where the market like a commercial vehicle, where it's already down, and where you're already providing that 15 to 20% kind of a discount, it becomes very hard to pass it on. And it takes a while because see, everyone looks for a demand pickup so that they can pass on the prices.
Okay.
And the longer that doesn't come up and they have to face the burn, the more the margin issues come in.
Okay.
Because see, I agree that the domestic business is very small now as compared to the whole consolidated number. But the only point is, if we are looking at something structural change in Tata Motors for the valuation to change, I think everyone is looking out for the domestic business to become profitable and show some kind of growth or stability in that.
Okay.
So that's where I think a PV or a two-wheeler is much more able to absorb that kind of hikes from auto anks rather than a commercial vehicle.
Okay.
Same happens with the highway construction equipments.
Okay.
So over there also, when the auto, as in the component, people hike it up, it's very hard for the OEMs like a John Deere and all to even put it up. Even the tractor space happens the same way.
And this hike that you're talking about, auto ank hike, it's announced or this is a yearly thing?
No, it's not announced, but
It's a yearly thing.
it happens yearly, and if you see the numbers, you'll see always when you see always a price hike between October to a December to a March quarter in the numbers of the auto anks, there's a certain amount of price hikes also, because the contracts are done yearly and they're reviewed quarterly. So generally the hike gets up on March and the auto OEMs are able to pass it on the April hike.
Okay.
So that's how the cycle has been turning for so many years. So maybe because past 2-3 years CVs have not been able to pass on that hike to the customer.
Okay. So that's the view that's coming in on Tata Motors. Both our guests are slightly neutral to bearish on Tata Motors, given the fact that probably raw material costs are coming out, and both of them don't see any kind of structural change that has happened that could move the PE ratio much higher for Tata Motors at this point of time. Let's move on to the next stock, and that is Berger Paints. The counter has been buzzing. It's up almost more than 10% from the December lows. Valuation wise, it's trading at 55 times this year and almost 45 times next year. What could you make of Berger Paints and the paint industry? Sangeet, I'll start with you. What do you make of Berger?
Again, valuation is a big concern for me. So there are largely three big players listed in this space: Berger Paints, Kansai Narolac, and Asian Paints.
Yes.
Obviously, Asian Paints is the big daddy of all. Trading at 55 times with crude at about $60–65, hardly leaves any upside from the current price. If I have to choose amongst the three, I would rather prefer Kansai Narolac Paints.
Okay.
The reason being, if you see the last quarter's numbers, both Asian Paints and Berger Paints have reported about 10–11% volume growth. However, it has been about 18% for Narolac Paints.
Okay.
The reason being, Narolac Paints derives about 50% of the revenue from the industrial and automotive paints business. And while the other two are focused purely on the home decorating segment. So I might as well prefer Kansai Narolac Paints of the all three, but as a pack, I would remain a little cautious on all the three.
Okay, but any view on the valuations of Kansai?
Valuation, all the three are trading at similar levels. So as such, all the three I am bearish, but if I have to pick one of the three, I'll choose Narolac Paints.
Kansai Narolac. Okay, what about you? What about you make of Berger?
Berger, see, I am neutral over there. Valuation, yes, it's a concern. See, either in the paint industry, the only plus point is the capacity. There are no new competitors which can come up easily, and the capacity expansion is very controlled due to the pollution norms. So it's very hard to get the approval of new capacity anywhere. Now, out of the three, Kansai got the approval and it's got a new production up. That's why you see that volume growth coming in higher than Asian or Berger. Berger over there, I see last quarter also when the results came out, the main concern is their ability to pass on the price hike again. So they did 3% in March, 3% in May, and June again the margins were lower. So that price hike which they are doing is hurting their volume growth, and they are not able to pass on as smoothly as a Asian Paint or a Kansai is. Again, now the $52 was the crude in last quarter the same year. Now it's around 64 on average this quarter. Now the whole thing is for paints, it happens after a quarter. So it'll be in Jan to March quarter where this kind of a crude hike will result into their numbers. Till that time, I still feel because of their higher employee cost and other expenses, their margins are getting hit. Berger. So that's where I don't see that, so raw material cost will be another impact to them. So that's why I'm a little bearish on the stock, but I still remain neutral because of the capex they are doing this year. Okay. So that will come online in maybe end of calendar year 2018.
Okay, just one question, Sangeet, on Kansai, which you said that you were bullish on. Are they in a position to pass on the hikes that of raw material to their consumer? And secondly, Asian Paints is diversifying significantly into other products, because paint is their main business, but now they're into other wallpapers and bathroom fittings and a lot of ancillaries, sleek, that they have. Does Kansai have something like that to diversify the risks of any kind of slowdown?
So first of all, within Kansai, 50% revenue is coming from automotive paints and industrial paints. Being a Japanese company, they have very strong tie-ups with the Japanese automotive companies.
Okay.
So that order automatically flows to them.
Okay.
So the balance 50% is only the home segment, and they are doing fairly well in the decorative segment, the premium segment, so to say. So of the three, I would prefer Kansai and Aerolac, but as such, I'm not bullish on either of the three.
Okay, so that's the view that's coming in on Berger Paints. So obviously, Berger Paints does not find any kind of thumbs up among both our guests. Valuations certainly are a concern as far as the entire paint industry is concerned. Let's move on to the next stock, and that is Syntex Industries. Last week, we saw a significant amount of these high beta counters move up significantly. One of the counter that is extremely high beta is Syntex Industries. So now Syntex Industry is a pure play textile company, because Syntex Plastics has been demerged out of it. What do you make of it? Are valuations fair? Sangeet, what do you make of Syntex Industries?
So I am bullish on this stock. So when the Syntex Industries as such demerged early last year, people were only talking about the plastics business. So this, I believe, is the dark horse in the group. So if you talk about the business, they are now starting into compact yarn manufacturing. So total industry capacity is about 24 lakhs spindles. Of that, they would have about 6 lakh spindles.
Okay.
So they will be the #1 player in India.
Okay.
I expect FY20 EBITDA to be about 1,000 crores. And it's available right now about EV to EBITDA at 5 times.
Okay.
So I find a very, very limited downside. Obviously, there are concerns relating to a low promoter holding. There are also issues relating to corporate governance and all. We'll have to see through that, how actually it fructifies. But as far as numbers and business is concerned, I remain positive on this stock.
Okay, what about valuations are fair for the?
I think 5 times EV to EBITDA FY20 is fair.
And what about the debt levels?
So debt level is high, but about 4,500 crores is the debt. But they have the tough subsidy and the capital subsidy, which will be there till the tenure of the debt. So 9% is the toughs and capital interest subsidy taken together, the state subsidy, which I think gives me little comfort. So I would be concerned if the interest cost was little higher, but because of the subsidy and with the commitment that the subsidy is going to remain throughout the tenure of the loan, that gives me comfort.
Okay, Samir, you don't track Syntex Industries as such, but do you have any view on the textile space as such, or?
See, textile space, the only problem with them is the upgradation of technology, which the funding they get from the government. I think there are very few players who are able to.
You're referring to the tough scheme that.
Yeah, the tough scheme, which has been there for so many years. They keep on changing the scheme parameters or scheme funds. But the only problem over there has been it's so the working capital cycle is so drastic that even a 30 days slowdown hurts the whole books. And that's why I think it's not a space which I recommend to be in. Because the only point is it's a very fast changing industry.
Okay.
And when the changes happen, the amount of money you have to put into adapt that change and the working capital cycle which gets stuck with you, because a lot is the exports. Domestic consumption is still limited. Maximum is the export side of it. So over there, any stretch in the working capital cycle hits the debt, which I am very concerned for any kind of textile firm.
Okay, so that's the view that's coming in on Syntex Industries. Samir does not have a view on Syntex Industries, but he is cautious on the textile space. But Sangeet is extremely bullish on Syntex Industries. This is the demerged textile business of the erstwhile entire Syntex group. Now let's move on to the next stock, and that is MCX. Now SEBI in a notification has indicated that it may allow exchanges to operate in all segments from October 2018. So is this negative for MCX, or will they be able to cope in from competition coming in from the other exchanges? Samir, MCX, what do you make of it?
So I'm bullish on MCX. We had this same stock earlier in November also. Because of two reasons. One is now when SEBI has allowed unified exchange to be there, I think there will be competition coming in from NSE, but the only thing is where the institutions start trading, because they've been allowed and they are more into the options trading. These two, the institutionals coming in commodities and the option trading in commodities, will help the volume, because the volume today is like lowest of the last 3 years. So there's everything wrong which can go wrong in the firm is there, and they've still not taken any kind of debt in that even kind of a slowdown. So working capital wise, the cash flow wise, they're all sufficient. It's just a slowdown in the industry, and see, any which way, if the equities are running, there's more trade happening at the equity end of the exchange rather than the commodity end of the exchange. So till the time they see, hopefully people globally on the commodity desk are expecting this year to be better for the trading of commodities, because last 6 months have been really good for the pricing of the commodities. So that commodity index going up in last 6 months has motivated people to take up higher positions in commodities this year globally. Now whether that reflects domestically, because generally when the equity is going up, the commodity exchange and the commodity turnover generally comes down, because there's more of trading which happens on the equity side rather than the commodity side. So plus I think the institutionals entering it will stabilize the flows also. So that will give a big jump to the whole system as such. Because right now they're doing around 2,400 crores daily, which is I think very minuscule if I see the whole institutional basket. So that gives me a very good upside to the stock. That may be another 8 months to 12 months.
Sangeet, Samir is extremely bullish on MCX. Do you share a similar view, or you have a different view?
I share a neutral view. I agree to this point that the institution being allowed to participate, PMS and all that, will add a little stability to the volumes. Also in terms of the market opportunity, it is immense. Currently the total commodity turnover is about half times India's GDP, and if you see globally, China is about 2 times, UK is about 6 times, US is about 3 times and all. So the opportunity is immense. But having said that, yes, NSE and BSE, we have seen what NSE did to BSE when it got launched in 1996. In a short time of span, BSE was practically out of market in its particular segments. So that remains a key concern to me. I'm pretty certain they would be aggressive, there would be price wars, so that has to be seen through. The incremental growth may not come through, but yes, on the positive side, as Samir mentioned, there are a few, the market opportunity is immense, but the exchange business is such that you generally have 1 or 2 players leading a particular segment. So we'll have to see through how the transition goes through.
So that's a bullish view coming in from Samir on MCX, while a neutral view is something that Sangeet has spoken about. And the final stock, we are asking our guest what they believe could be a big top pick that they believe for 2018. I'll start with you, Sangeet. BSE is the stock that you're talking about today. So you just spoke about what NSE did to BSE, and you're recommending BSE. So
this is purely, so if you see optically, so first of all, I'm very, very cautious on the market at the present level, looking at the mid caps, small caps, large caps, the way they have rallied. But yes, if I have to pick a stock at the current level, considering the valuations, so BSE is one stock which I feel could give some value. If you see, so total market cap is about 4,600 crores. The cash lying in the balance sheet is about 3,000 crores. Plus the CDSL stake, the 24% stake which they are holding, is even at a 20% holding company discount, is valued at about 700 crores. So that leaves of only 1,000 crores that you're paying for the entire BSE business, which includes the capital market, the currency. Currency, they are, by the way, the market leaders with about 47% share. Plus the Gift City expansion which they are doing. You also have, over the last 5 years, you have seen that the volumes have actually doubled. So yes, there's no dispute that NEC will continue to remain the market leader. But you will also have BSE's volume getting double, which we have seen.
Okay. As also, the market moves ahead.
As the market moves ahead.
Okay.
Also, if you see the revenue breakup, about 40-50% of the revenue is coming from their, it's like a fixed revenue, the listing fees, the annual compliance fees, and so on and so forth, which is kind of insulated to the market movements.
Okay.
You know, so that leaves a very small proportion coming out of the market movements. So that gives a lot of valuation comfort as such. So I remain BSE, and plus they have also announced a buyback.
Okay.
You know, obviously the size, quantum, etc. would be determined next month. I think the meeting is on 25th. But for a retail investor, we have seen, you know, Infosys, Wipro, buybacks have been a, you know, decent way to get a decent IRR on their investment.
Okay, just two quick questions. Do you have any kind of potential upside that you believe that BSE can have?
I don't have a price target in mind.
No, I'm just talking in terms of percentage. How much do you see, let's say next year when we are talking, how much potential upside can BSE give?
What I can tell you is,
or how, or if you can give a time tenure, if someone is watching and he wants to buy, so there should be a time tenure or a price.
So maybe about a year or so. The comfort which is there, it's trading at about 925, 930, which is very close to the 52-week low. You know, and with the valuation parameters I mentioned, there's hardly any room for a significant downside.
Okay.
With the buyback also in the offering.
Okay, and what are the risks that BSE possesses? So these are the opportunities. Are there any risks that?
So risk is one is the gift city. So obviously they are right now incurring losses in that segment. So one is the gift city thing. Also, one advantage I would say is the commodity that we just spoke about. So once the NSE and BSE introduces commodity, I'm expecting some market share gains for both the exchanges.
Okay, so BSE is the pick that Sangeet has spoken about. You are bullish on Linc Pens. What's the rationale?
See, Linc Pen, if you see, they're the only listed firm in the pen manufacturing system. So 13% is owned by Mr. Bushi Pencil Japan. Okay, and Mr. Bushi Pencil Japan is the highest, as in the topmost company in the global pen manufacturing systems. For them, they do a 16 to 18% ROCE, right? The margins are around 9.5%, which was 7% 3 years back. They have done a capacity expansion which was completed in Q2 FY18, so the last quarter which went by. And this capacity expansion has happened so this is the second plant. They've been always running on one plant, and that was based in Calcutta. So the problem with this is there's a lot of imported material, raw material which is there. So the traveling cost of that imported raw material from Bombay to Cal used to be on the working capital issue. We used to make a lot of working capital issue for them, and used to increase their costs. Now they have a plant in Gujarat, which is 180 kilometers from Bombay right now. So they have put a plant over there which will double the capacity of which they have, and reduces the working capital issue and the other things. So I think this will be, right now they are 500 crore market cap. It should be 750 to 800 market crore in next FY. That's what I see.
Okay, so it's a bullish call that's coming in from on BSE from Sangeet. Well, Samir is extremely bullish on Linc Pens. Before we wrap up on the show, here's a quick recap of all the guest views on the stocks that we have covered till now. Okay, Samir as well as Sangeet, thank you so much for joining me on the show. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.